Let's look ahead to the rest of the year, because you say you expect the market to hit new highs. And, you know, this comes at a time when there's a lot of concern about the impact of all the trade talks, how that could weigh on the uncertainty. We are already hearing some commentary from some companies maybe pulling back on the investments a bit, concerns about the stronger dollar as well. So when you factor in all the headwinds that are coming into the market, what do you think is the single factor here that's going to push the market even higher?
I think the basic strength in the U.S. economy, and that's shown by the very, very low unemployment numbers, people continuously coming into the workforce and getting employed, by the high cash flow, very healthy condition of corporations, very, very good balance sheets, free cash flow yields that are increasing above their needs for capital expenditures. And the fundamentals, I think, are so good that it can take in stride the talk about tariffs or trade wars and slightly higher rates. And still, I think the higher cash flow is going to outrun increases in interest rates or any PE compression as people get concerned about a little deceleration in the pace of growth over the next few quarters.
So stronger earnings continuing to push the market higher. I mean, how much more room do you think there is to run?
Well, as long as we keep having growth companies that can grow their earnings at multiples of the basic economic growth, companies growing earnings at 8, 10, 12, 15%, I think that allows room for stock prices to move up. Even if we have a little price-earnings ratio compression, the earnings, I think, will outrun that and make equities pretty attractive. And bond rates are so low, they don't provide really much competition for the investor. When you look at the rates of return of bonds versus stocks, still favors equities.